Hello and welcome to this recording of the Professional Research and Data Group's COVID-19 Intelligence and Impact February 2021 update, where we report on up-to-date data and statistics from some of the members of the group. I'm Regine Sonderland Saga and I'm a research associate at the Institute of Place Management, and I'll be taking you through this month's data pack. I want to remind you that it's good to share data, and this data pack will be available in the High Street Task Force repository. You can access the repository via this URL, and if you search for PRDG, this and all previous Insights report will come up in the results. And also please remember to cite each source correctly. So for example, if you are using data from the slides containing data from Office for National Statistics, cite their source directly as shown below. Professional Research and Data Group is part of the High Streets Task Force, which has been funded by government to support people transform their high streets and town centres. Here we see an overview of the member organisations of the Professional Research and Data Group. In this month's data pack, we have firstly an update on UK footfall data from the Institute of Place Management and Springboard collectively. Then we have an update on business and retail sales impact of COVID-19 using data from Office for National Statistics. And lastly, we have an update on social media monitoring from Maybe. We start off with the update on UK footfall data. Footfall in the UK has been falling since the end of February 2020, and footfall on the 22nd of February 2021 was down 63.3% compared to the same figure last year. This time last year, COVID-19 was not yet widespread in the UK, and we had not entered the first lockdown, and so footfall was at normal February levels. Footfall on the 22nd of February 2021 was actually down 3.3% compared to the same figures last week. So this could be due to the weather, as parts of the UK experienced rain and strong winds. The overall trend though, however, this lockdown is that footfall is slowly but gradually going up. We saw this in previous lockdowns as well, a certain amount of lockdown fatigue perhaps, which means the longer the lockdown lasts, the more people venture out. We also look at footfall by signature type, and we have 4 different signature types. Starting with holiday towns, they are busy in the summer and quiet in the winter. And they focus on offering a good experience to visitors during the summer peak rather than on their local catchment. They are attractive to tourists but have a relatively weak comparison offer. Speciality towns get busier after Easter, with the largest peak in footfall occurring in the summer, followed by a smaller peak before Christmas. Anchors are not retail-based, offering something unique and special, for example, heritage and culture. They attract visitors but serve the local population as well. Multifunctional towns have a relatively flat footfall throughout the year with no noticeable peaks. The retail offer, opening times, events, services and other uses are focused on the local community. They have convenience anchors, work, public transport, shopping, markets and so on. And they organise themselves to be reliable community hubs. Comparison towns have a noticeable peak in footfall in the lead up to Christmas. They have a wide range of retail choice, leisure, food and beverage, strong retail anchors, and presence of international brands. And people travel a considerable distance to visit, and they serve a wide catchment area. Now, as seen in the graph, comparison towns experienced a rise in footfall on the 22nd of February, plus 4.1% compared to the same figures last week. However, comparison towns also had the greatest year-on-year decline among the 4 signature types at minus 70.6% compared to the same figures last year. Holiday towns, on the other hand, experienced the biggest decline in footfall on the 22nd of February at minus 13.2% compared to the same figures last week. Now, this could be due to the weather, as explained in the previous slide, as holiday towns are quite weather dependent. However, holiday towns had the lowest year-on-year decline in footfall at minus 45.8% compared to the same figures last year. Holiday towns have fared relatively well in their footfall recovery, as seen in the graph. So next up, the data pack presents the latest data released on business and retail sales impacts of COVID-19 from Office for National Statistics. It is from a fortnightly survey of all types of businesses across the UK, so you will see the sector breakdown in the upcoming slides, and it's performed by the ONS. This survey period had just over 10,000 businesses that responded to the survey. The first graph to the left here gives an overview of businesses' trading status. So overall, 72.5% of businesses surveyed reported that they are currently trading, whilst unfortunately 2.6% reported that they have permanently ceased trading. As the UK is currently in lockdown, 24.9% of surveyed businesses reported they are temporarily closed or paused trading. The middle pie chart here gives an overview of businesses' turnover. So of businesses who are continuing to trade, 46.2% reported a decrease in turnover compared to what is normally expected for this time of year, whilst 6.1% reported that their turnover had in fact increased. And finally, 38.4% reported that their turnover had stayed the same. Finally, to the right gives an overview of businesses' workforce. So of surveyed businesses who had not permanently stopped trading, 18.3% reported having staff on partial or furlough leave, whilst 43.7% of businesses' staff are in fact working in their normal place of work. And 34.8% are working remotely instead of their normal place of work, which is expected with the current lockdown. As seen in this figure, the accommodation and food service activities had the lowest percentage of businesses currently trading at only 35.4%. And the arts, entertainment and recreation sector followed closely with 56.3% of businesses continuing to trade. And we have seen that these two sectors have been quite badly hit due to the lockdown restrictions of COVID-19. The arts, entertainment and recreation sector does continue to see the greatest financial impact of the pandemic, and this survey period, 79.2% of businesses currently trading in this sector reported that their turnover had decreased. The accommodation and food services activities follow closely, with 68.9% of businesses currently trading in this sector reporting a lower turnover this survey period, naturally due to lockdown restrictions and not being able to open. Looking at businesses who reported that their turnover has in fact decreased, this graph reports the change from last survey period. So an increase in percentage here means that less businesses in the sector are reporting a decrease in turnover. So businesses in several sectors are reporting a decrease in turnover compared to previous survey period. However, the water supply, sewage, waste management and remediation activities report as the greatest positive change at plus 16.9%, where less businesses in this sector reported a decrease in turnover compared to the previous survey period. On the contrary, real estate activities reported the greatest negative change as seen in the graph at minus 3.4% compared to previous survey period. So this means that more businesses in this sector has seen reduced turnover, which could be the impact of commercial tenants not being able to meet their rental commitments. Looking at businesses reporting staff on furlough, the arts, entertainment and recreation sector had the largest proportion of their workforce furloughed at 58.8%, closely followed by the accommodation and food service activities sector at 50.8%. Professional, scientific and technical activities had the smallest proportion of workforce furloughed at only 3.8%, closely followed by the construction sector at 3.9%. Now, this could be due to the professional, scientific and technical activities sector being able to work from home and construction usually working outside. So this graph gives an overview of the change from last survey period in terms of businesses who have reported having staff on furlough. So here a decrease in percentage is a lower proportion of staff furloughed. So the accommodation and food service activities sector saw the greatest increase in proportion of their workforce furloughed at plus 3.5% compared to previous survey period. On the contrary, the other service activities have less staff furloughed compared to previous survey period, with a decrease of 7.6%. Looking at the retail sales impact of COVID-19, in January 2021, retail sales volumes fell by 8.2% compared to December 2020. This is perhaps not so surprising though, as retail sales do peak at Christmas. However, volumes were 5.5% lower when compared with February's 2020 pre-lockdown level. The impact of lockdown restrictions on the retail sector was therefore less significant than in April 2020 during the first full month of retail restrictions, as sales then fell by 22.2% when compared with levels before the pandemic. But despite overall retail sales volumes declining though, online sales experienced the highest proportion on record in January 2021 at 36.3% of total retail sales. This is an increase of 5% from December 2020, when it was 31.3%. Now it is over to Polly from Maybe, who will present their latest update on social media sentiment data.
Hello, my name is Polly Barnfield and I'm the founder and CEO of Maybe. I'm here to talk you through our data pack for the PRDG group of the High Street Task Force, and we have a summary of High Street social media sentiment data for 2021. This data is compiled by Maybe and it's based upon the social media taken from 3.5 plus million organisations that we can find on Google Maps across the UK. We then go and append the social media data from Twitter, Facebook and Instagram on a daily basis to provide a really rich source of what's going on across the UK. We break this data down by town boundaries, and in for this report we've got 10 cities that we're looking at. Each city has a colour that is appended throughout this presentation, so where Birmingham is yellow, orange in these graphs, it remains orange all the way through, so you can follow the story as we go. So here we're looking at Birmingham, Bristol, Cardiff, City of London, Glasgow, Manchester, Northampton, Nottingham and Oxford. What each line represents is all of the data from Twitter, Facebook and Instagram for all of those businesses in that place. So the first graph on the left-hand side really exposes this really worrying trend, which is that on average across the UK, only 28% of businesses are active on social media on a daily basis. If you look at these are fairly big metropolitan areas, and Manchester is the overall winner here, with close to just over 40% of businesses active on social media on a daily basis. At the bottom of the pile, you've got Northampton and Birmingham, who are just above 20% of businesses active and rising now to more like 30, which is great to see. So the percentage of organisations active on social media, this is where life gets a little bit, this is where it gets really concerning. So based upon those that have a social media account, this then shows you the percentage that are actually active. So it's a percentage of a percentage. What's interesting here is you can see the dip at the weekends, which is staggering. In every town we see this. Businesses in the main tend not to post at the weekend. What's positive here for Northampton is you can see Northampton was very much at the lower end of the pile at on the first slide. And then second slide, whilst they don't have many people using social media, those that are more active on average than other towns and cities across the UK. Now you might say, well, so what? Does it matter? Well, for me, the so what is this, which is that 66% of consumers spend nearly 3 hours a day on social media. So bluntly, if you're not talking to them, they're not going to turn up. Now, granted, right now, it's not about turning up. But we know from the data we see that businesses or places that remain connected to customers, particularly in times like now, have a better chance of attracting them back when they're open. Just think about Primark as an example. Primark as a business right now is shut. They're like every high street. They cannot sell anything. They don't do e-commerce. But if you looked at their social media data, it's as good as Boohoo and it's as good as ASOS. Even when they're shut, they don't miss a beat. They keep talking to them. And I guarantee you, in all of these cities, when Primark open up, there will be a queue. Now, if you think about your place, if you think about your city as a whole as a queue, if your businesses aren't doing what Primark are, they don't have queues. So we're all about helping people understand that. So that's why these gaps at the weekend are really rather sad, because this is the time when consumers have more time to think about what they're doing. Probably they're spending money online. And if your businesses aren't talking to them where they can sell online, they're missing out. They're missing business. Here we've got two more interesting graphs, which is the post volumes and the engagement volumes. It's very interesting to see how everybody follows a very similar trend. Again, here you can see that Manchester comes out top for the volume of content they post. This spike here is around Valentine's. There's a real leap around Valentine's this year. Very interesting to see. There's also around this time a big announcement around the high streets potentially reopening. I think we just saw a big jump in conversation. And around engagement volumes as well. There's something very interesting we've spotted around this dip in conversations during lockdown. We've done a piece of research. So the engagement on the left is post volumes. So again, you see the same trend of people posting during the week and not the weekend. And then this looks at the engagement, and you see here how there's less of this big peaks and troughs. People want to engage with the engagement is people engaging with those posts. But what's fascinating is that during lockdown, when people are talking more about COVID, although that the post volumes are the same, the level of engagement is much lower. Now we know that from some work we've done with retailers and Retail Week, that where people talk a lot about COVID and the pandemic, consumers engage much less with that data. So I think as high streets move into a reopening phase, God willing, in the coming weeks or months, it's really important to balance that safety message with what's attractive about your place, because people, yes, they want to be safe, but they come in because they want something attractive. And let me just show you this in two more slides, which I think are really really bring it home. This graph on the left is the sentiment data. This is looking at the sentiment of the words from all of the businesses in each town. And you see this gradual drop in sentiment. And that's really as lockdown took place, you see the drop in sentiment. Now, the research we've done really suggests, as I said, that anything COVID related it doesn't create positive sentiment, obviously. You see here Northampton, the pale yellow is very much top of the sentiment curve here. And when we get through to look at the word clouds, I'm going to show you something really interesting, which is that you can see how each of these word clouds represent the summary of what everybody's saying in the town. So it's, the bigger the word, that means the more it's said. So for example, here, Birmingham, nice big Birmingham, that's healthy. Christmas, this data went from Christmas through to February. And COVID, so COVID quite strong here. But we just go through, remember Northampton is the winner at the moment on the sentiment stakes. Oxford, lots of Christmas. Bristol, lots of COVID. Nottingham, Christmas, and a bigger word for Christmas. Bigger word for Nottingham, and Christmas is smaller. Now I shouted out Northampton. It's very interesting. So Northampton, Christmas. Northampton slightly smaller than Christmas, but the biggest of all is Northants together. Now, one thing that we find and every day amazing. So the sentiment in and around Northampton and social media is more positive because they're working at placemaking really hard. So let's just whiz back and have a look at that again. You see here that on the sentiment, you see how Northampton is coming up tops? And then look at these word clouds. Everybody other than Northampton, every day amazing. A bit in Birmingham, where's Birmingham? So Birmingham is in orange, so yeah, it's at the higher end. It's placemaking digitally is about talking about your place. And Northampton Together, Everyday Amazing, is shining through their word cloud. That means more businesses in Northampton are talking about than anything else, and they have better sentiment. Same things apply here. So there you go, really quick whistle-stop tour. This data is being pushed out into the High Street Task Force dashboard in due course. Anybody who wants to know more about it, they can hop into Maybe and you can access this data, particularly as a High Street Task Force local authority, free of charge. So please get in touch, and thank you very much.
Thank you for watching this presentation of the Professional Research and Data Group's Data Pack for February 2021. If you would like to find out more about the High Streets Task Force, please visit the URL displayed on this slide. Thank you.